Just make sure. Right, good. Let's get this on. Let's get these charts up as well. Alright, good. Get that over there. Let's get rid of this. That's done. Welcome everyone. Let's make sure the Zoom started. Let's get this over here. Share the screen. Right, that's good. That's good. Let's get that over here. Get that on there. Perfect. Right, good. Get that on there as well. That's all done. How's everyone doing? Hope everyone's well. Hope you're having a nice week. Hope it's nice and sunny where you are as well. Beautiful sunny day. Do this and then go and enjoy the rest of the day in the sun. Oh hey Matt, Alex, Joe on YouTube. Alright, good. Hot as per usual. Yeah. Alright, let's get that off there like that. Right, I think that's everyone. Okay, let's have a look. Let's make a start. So let's have a look at gold first off. So we're going to do a rundown. It's going to be, the watch list is quite simple. To start with, gold, pound yen, pound dollar, Aussie dollar, which we're currently called as a trade, Aussie dollar short, Euro New Zealand, and then anything else that you wish to look at. I think on top of that we have got one request for pound New Zealand. Before we start, just have a quick look at the dollar index. So you see when it broke 92, I think last week, that we were seeing dollar strength. Fair enough. I mean, all the hype. Someone was asking about this today. Just expecting to see dollar weakness, and it's like, well, yeah. By the time the news, social, like mainstream media, get hold of the information, quite often it's old news and it's done, isn't it? So you can see here that we were toying below that 764 and then sat on it. This is a weekly chart for a few weeks, and then we launched off it actually to the upside. So the 764 strategy shown on a weekly as well, that you can see the volume has crossed over the zero line here, and the volume is now showing potentially to the upside, which is interesting, because that would then see dollar related pairs like pound dollar, Aussie dollar, euro dollar perhaps show further downside weakness. So that's where we're at, and I really like the fact that we've had a decent move to the downside. So potential pullback. You see what I've done here? I've just plotted some fibs. The reason I'm showing you the dollar index is because it's so relevant to everything that we generally trade, not just the dollar pairs, but it does have a knock-on effect, doesn't it? Have a knock-on effect to pairs like the yen pairs as well. So what we're seeing right now is a potential retracement up to 94.46, so above 94, back up to retest the previous structure as a potential retracement. And then from there, where will we see it go? Well, I think, like I was reading some articles this morning. I'm always posting in the Telegram group in the morning news, especially from overnight, which one of the articles was regarding a short squeeze on the dollar. So, all those retail traders jumping in at the lows, thinking it's just going to keep going down and down and down without pulling back. Yeah, they're getting short squeezed now. Interesting as well how we are seeing further upside, record highs on the stock markets as further stimulus has been brought in. into the US economy. And so you see how that reflects on gold and the dollar index, and just see how it all plays out really over the next month. We've got Easter this weekend, and the kids are going to be off for a few weeks. So we'll see how, and it's the end of the month and the end of the quarter as well, first quarter. So do expect to see potentially some big volatile swings, perhaps today into tomorrow. So just be mindful of that as well, because things could get a little bit cranky and a little bit crazy. So historically, it has happened. Last year was the same. We had massive swings. So let's have a drill down quickly to gold. So there was a nice setup on gold, nice trade. We were waiting very patiently for this. I've quickly highlighted the monthly because I want to show you where we're at. 1682 is the 38.2 of this major low. So that's the last major swing low, which was just over $1,000 back in the days when it was $1,000 before it shot up to like 10,000 pips to $2,000. So yeah, not bad really. That's where we're at. So I've taken that high and that low on the monthly, just showing you the downtrend that we've had. We've had a really good push as we come into the last few days of this quarter. Just looking at what's going on with a hedge fund at the moment, there's been some massive drawdowns where there was a hedge fund, I don't know if you guys have all seen that in the news, about billions of dollars being wiped off, and there's been a lot of exposure with some of the banks like Credit Suisse, Deutsche Bank, and so we're just seeing how that's going to have a knock-on effect. Could be that we see some liquidating positions on gold further. So like we saw last year with the pandemic, we had this spike down and then it went up. So we could see where positions were being liquidated to balance their books from some of these hedge funds that were suffering some drawdown from the sudden pandemic sell-off, and so that could be a result. I mean, I've not seen anything or heard anything as yet, but yeah, so I'm not going to go into it too much, but it was just a hunch based on what happened last year. So maybe it's got to go down a bit further. So 1600 is what we're looking for. However, we do have a major 38.2 at 1682, and we have been down to 1676. And if I just drill down, let's start drilling down a little bit further. We are on a weekly clearly showing a nice retracement. That was fine. Look, we had a couple of weeks up. Last week consolidated, a lot of chop, and then we finally broke. No drama there. That was always on the cards. It was just a case of having to weather it and be a lot more patient. So 618, based on this pandemic sell-off that we had, 1451, 1450 before it shot up. So cleared out all the stops, a lot of liquidity, a lot of rebalancing from the institutions, and then it went up. So if it does break and we do see a nice little stretch down, then yeah, 1600's a round number, 76.4. That'll be the line in the sand that I'm interested in. And as I highlighted in the Telegram group today, we did have a couple of pit stops potentially if it does break 1655, 1650, and about 1630, low 1600s before we get to 1600. So it could toy around, it could go like that and then bounce up and keep going. But certainly it's bearish, and certainly once it breaks the 76.4 of this last range, which we can drill down into a bit more, downside targets are the 1655, to the next fib extension level. So that's got scope. Just watching the volume as well, it looked like at one stage it was slowly getting closer to the zero line with all of this consolidation. Whilst we were consolidating at around 1725, which was a 38.2, it was just bouncing off that area. It just kept bouncing off it. So one of the guys, he's just been focusing on gold. He's been doing well with it, and he said to me the other week about, he's at work, he wants to go part-time, he wants to do more, he doesn't feel like putting in a few hours a day is enough. And I'm like, it's perfect. You don't want to be giving up a job then just to come and do this as a full-time 12-hour day shift. A couple of hours a day to make your money is the idea. So his current work-life balance and schedule seems to be working for him. I'm concerned that if he does give up his job or go part-time, he'll end up putting too much effort into trading and over-trading, and then end up not having the same success as he currently is. So at the moment he's focused predominantly on gold, and he keeps catching his moves. I think he got stopped out one time, but over the last 2-3 weeks he's been consistently making money off gold.
Yeah, I'm here.
Oh, there you are. Oh, yeah, there you go. Yeah, so nice work, nice going, and just sharing with everyone else how you're getting on, because I think your balance and the way you're doing things is good and it's working for you. So yeah, don't want to change it. If it's not broke, don't try and fix it. So where to next? Well, like I said, 1655. I think it'll take out that low. If it drops to that low, it'll take it out. But we'll see. We've got some resistance levels, or support levels rather, on the higher time frames and the bigger range. Just to reiterate something as well that was mentioned the other day, people were talking about time frames to trade off. So someone here trades off a 1 minute, and I have no problem with that, because I look at a 1 minute and a 5 minute and a 15 minute. I just set up the strategies to work off the higher time frames, because I find it's less noise, and especially if you're still quite new to trading, it just allows you a little bit of a calmer approach to see things a bit clearer, and things are moving a little bit more slow for you. So it's like happening in slow motion. When you look at a 1 minute, the setups are still there. You know, it still bounces off the 76.4. It's still, you know, we still have divergence. It's all happening, but it happens minute by minute. So in like 15-minute time frame, you might have a ton of things setting up. So it's just about how you read things. But the important thing that I wanted to stress and reiterate is be sure that don't focus on the time frame, focus on the range. So all the time frame is doing, it's just allowing you to see whatever the range is that you're looking at. So this is a daily chart on gold, and for me, I'm looking at the high, this last swing high, 1755, and the last low from the start of the month. So we've gone full cycle up here, about 400 pips or so, and then we've consolidated before cycling back down the second half of the month, and that is a natural. You know, people talk about phases and cycles in terms of trading. So this is a typical month, a month where we've had the retracement, first 2 weeks, consolidate, and then the sell off into the last few weeks of the month. So you will see that. You'll see that time and time again. If you're not aware of that, or you didn't quite make sense of that, that's generally how price can move when you have these types of price action, when you have this going on. So this was an MT strategy with the break of the 38.2 to confirm an entry. Sure, you could have had entries higher up at any point, but it was very choppy. But once it broke yesterday, this was the move. The T1 would be down to 1695, which it touched. It, you know, did that this morning. Nice move. So you could have still gotten in at any point between yesterday and today. We had some consolidation. We had some retracements. So I said safe exit would be around 1700 for a T1, but 1695 is my 764, and that's where we'd want to play it. I know the gentleman in question, he shorted it, had two targets, 17 and 1696, just slightly rounded up above the 764, because that's how we trade. We like to round up just to be sure that we get limited out when it hits the target. So T2 is going to be 1655, as I've highlighted on gold. Break of this low and get down further and see further downside selling maybe between today and tomorrow. We'll see, because so far we've had a really strong bearish push since yesterday, and it's continuing. So you know that gold can consolidate for weeks on end like this, but in equal measure you know that when it trends well, and so now it's trending. You know, that's why I had one of my guys who struggled a little bit to get in on gold, and I was like, well, you know, had he spoken with me or a bit of guidance, I would have helped him with it, because when a move is happening and it's trending on gold, you just go with it and it will give you the pips. It's very generous in that respect. So it's just about waiting patiently. That's all. Most of the time you just have to wait. Look, all of this noise, you would have had to ride this out, and it was pretty nasty, to be fair. Big swings up. So that's gold for you. Let's have a look at pound yen. Pound yen has been giving pips galore. I mean, it's just keeps giving, and it just respects the levels. So if you recall, the 11th of March, I stated that it was going to react off this 151.45, and I put my name to it, and I said this is what's going to happen, and it did. We had the sell-off, 400 pip move down off that 38.2 fib. And forget that this is a weekly chart. Again, I'm talking about the range, so it's just you can see it clearer on a weekly. So that's the high-low range, and so you know that we'd been going up and up and up for about 8, 9, 10 weeks straight. Total imbalance, no support. You know it's going to curl over, you know it's got to pull back a little bit, knowing when and where, because people are often getting stopped out trying to call tops and bottoms because they don't know when to get in and out. They just take a punt in the hope that, oh, this looks good. But knowing exactly when and how and where it's going to turn. So like here off the 38.2, I wanted to demonstrate just how powerful it was. And it did. It did exactly what I said it would do. And that's not because I'm a good trader, and I keep saying that. It's nothing to do with me. This is just price action based on using key levels. People talk about wanting to know key levels. What key levels are there in the markets? Well, when people talk about that, for me, I use fibs because they just work better than pretty much anything that I've ever used out there over the last, say, I don't know, 10 years of being a retail trader, trading retail. So you want to know how to use certain things. I find that fibs are just spot on. So I've honed my skills with using this powerful tool because it's very precise and accurate. And you can see off that 38.2 how it bounced here, 1, 2, broke back up, one final push before dropping. That was a fib extension to the 161. Then we had a 400 pip drop. 400 pip drop to the 76.4. That's the line in the sand. If it broke there, then we change sentiment and we say pound yen is no longer a deep correction, but it's actually going bearish, and we'd look for fib extensions down to 146. As it happened, we had a wave 1 push up, then a 764 pullback of that little range. Somebody made a little bit of money on that, little 20-30 pip, little cheeky short trade again. Look here. Elliott wave, do some studying on Elliott wave as well, because that harnesses the power of the fibs as well. So you had a move up, 764 pullback, 148.74. So 148.80 was the play, because it likes the 80 number, likes the 30 number, and then wave 3 is just taken off and just gone and gone and gone. One of the guys was looking at MT strategy to bounce off the 38.2 and to curl over. It didn't. He got stopped out, but then because we'd done the analysis and we've been doing some one-to-one, he knew what the levels were to look for. He knew what to do. So what did he do? He didn't just cry about it or stress. He was proactive enough to get on it. He took a small loss here and made his money by going long, saying, okay, it's broken. MT strategy, let's take it up to the 764. And I said to him, look at that 38.2 major fib. That's just in the way of the 764, so it might just stall before that. So he set his target just before, did that to the pip, bounced off, dropped 100 pips before going up again and having another go. And then there were further trades to be had over the last few days with buying again to the 764 of this range, T1. T2, the 121 extension at 151.80. Bang on the money to the pip yesterday, bounced off it. Likes the 80 number, likes 151.30. It's just pound yen's been moving exceptionally well. And even if you just focused on one or two pairs like pound yen, gold, there's so much potential. You don't really need to do anything else. It just keeps giving. Right now we're floating above that 38, which could suggest that we've done the correction. We've acknowledged this big old bit of resistance. We've got potential further upside to go. Will that happen? Well, I'm looking for it to break the previous high if it does, and then the fib extension will be our major T2 at 153.60 area. So note these levels. That's what we're looking at. Obviously, if it breaks down here and drops back below, we could see a massive sell-off and further dollar index strength, which has a knock-on effect to the yen pairs as well, in terms of yen strength and weakness. And we just see what the correlation is. I keep meaning to do a correlation video. I've just been too lazy the last few weeks, to be fair. Just waiting for the new month. Moving on, pound dollar. I haven't really done much on it, but pound dollar, I was going to take a short on this today, or at least called a short on this alongside the Aussie dollar. I said to one of the one-to-one traders, this is a setup, but go with the Aussie dollar because that one's just a lot calmer and conscious of the end of the month with all the volatility. It could get a bit crazy. I know pound dollar could easily then get a bit choppy because it's fickle like that. So I thought just opt for Aussie dollar, but it's a good setup. Break of MT strategy, break of the 38.2 around 137.80 down to 137.11.8. So what's that? Round it up to 12. I'd round that up again. 137.15 T1. 137.15 T1. And then a break of that. Look for the extended levels. 136.20 area. Likes that 20 number. Ultimately, though, looking for lower still. Lower still, we are basically saying, look at the weekly. We have a certain amount of divergence that we had from the last few weeks, and so we are ultimately looking for this zone here back down to previous structure Sorry about the mess. Here, 135 area. So pound dollar for 135 previous structure, before potentially deciding on whether it wants to go up or down, which you could see further dollar strength. That ties in with our Aussie dollar setup as well at the moment. Just show you a bigger picture. I've actually done a video as well, which I recorded with one of the one-to-one guys, and I said to him, do you mind if I record this as well and put it out there? So I uploaded it to YouTube. That was the last video I've just uploaded, and it's the analysis for this trade. So you can see 7.6, it stalled at 7.6, which is a 618. Oh, these trading view charts drive me crazy. They don't seem to be working. I think there was an upgrade or something. It's very weird. You used to be able to just click and it would just do it. Now I have to kind of manually unclick. It's weird. Maybe it's just me. But anyway, what I've done is I've dissected this complete move up since the pandemic. There's a pandemic sell-off, and then we've had an up move, up and up and up and up and up. Common sense will tell you that something's got to give at some point. I know a lot of people have been looking for it. It tapped out 8,000, which was really nice. So I really like Aussie dollar because it's just no nonsense. The Aussies are no nonsense when they trade this, and it just seems to be a nice pair to trade. So we've come down, reversal candle on the weekly, really powerful, off a round number, no nonsense. First target which bounced off was a 38.2 of this range. So I've looked at the whole bigger picture, but now I want to drill down and just dissect it. So like I said to you guys, I've dissected it. This is the area that I'm looking at. Next downside is 7,500. 7499, a break of this 38.2 with MT, stabbed down, but so far hasn't closed on the weekly. But this week is all to play for. And I'm thinking, okay, further downside with dollar strength. We've had indecision yesterday, a really nice candle, doji candle. I like the look of that, and I thought, okay, good. Let's see you carry on down. Have another go to the downside. 7587 is my 764 of this current little range. So I've rounded the target up to 7590. 7590. Let's see if I could just show you that, because then ultimately we're looking for 7230. 7500 and then 7230. So there's a couple of decent 100 pips, hundreds and hundreds of pips to be squeezed to the downside potentially on the Aussie dollar if it breaks and holds below this 38.2 of this last major range. And so you've got 7500, and that's the play, and that ties in quite nicely with those fib extensions as well. Of course, if you have any questions, you just ask. You can just message me on Telegram. But that's where we're at the moment. Let's just show you that again on a 4 hour so you can see it a bit cleaner. See, these charts are just got to keep resetting, keep moving. Anyway, there you go. Excuse me. Great day today, sunny and warm. I feel like spring is finally here. Much needed vitamin D. Right, where are we off to? Euro New Zealand. We called this one last week. It had to be patient. This is a 4 hour chart. Look at these 4 hour candles. Bit rubbish, aren't they, really? But we've done what we wanted it to do, at least for the first instance. That's really strong support. 167.35 area was the area. That is fib clustering nicely here. So we've got two highs and lows. So I've got this major, the proper low is here, using the same high. Then I've got this one where we pumped up from, which was a 618 of this range. So we pulled back 618. So it's gone up. So we've got a nice 50% of that range here. We also have the previous structure and the 38.2 of the entire picture, entire range here as well. Good solid support reflected in the bounce that we're seeing to tell you, yeah, we acknowledge that strong support. Power of those fibs again. Yeah, it's just no nonsense really. It's just no excuse really why people can't make money just using some simple support and resistance. Forget what the institutions are doing, and you want to trade like an institution, or they don't use this or don't do that. Just don't worry about it. Just less is more. Somebody said that today, didn't they? Just focus on what's actually going on. We have here beautiful support, and will it hold here? Maybe. If it breaks, then we're going down to 166 and then 164.80. So Euro New Zealand, but that's been really good. I know a couple of guys have managed to make some good money off that as well. So that's that. Let's show you this on the weekly. I shared this actually with my group about I'm going to share it a few weeks ago because I was showing the bigger picture, and I wanted to show you how the support has been holding. You know, when we look on a higher time frame and we look at the complete range, we've got this support, and we said if it broke here, we've got about 900 plus pips to the downside to go. But if it holds here, you expect it to bounce, and it did hold. It came down to support and it held, and it spiked up. So we had a reaction, which is exactly what we said, you know, we were looking for would happen. We'll see something, and it did. It pumped up, almost touching 170. So it was quite a nice move up, just shy of 170. And now it's giving it all back. So if we slide lower, then yeah, we'll look for that 764 of this range, of this pump. So pump, pull back, and then from there, could it go up and be bullish again as a next leg up? If it fails here, then that's the line in the sand. We might just come all the way back down into the mix. Ultimately, our first target would be 164.80. So this is quite a nice little play. It's got nice range, plenty of pips, good setups. Price action's been good. I mean, it's slow, but it when it gives, it gives. Yeah, really nice stuff. Finally, someone's asked me about pound New Zealand because they can see some divergence on the 4 hour, and I thought, well, that's good. He spotted some divergence, 2-wave divergence, which is, I'd say it's probably 3-wave here actually. Look, what do we mean by that? Well, think of these as waves like the sea. So you've got the volume going up, and then the next bit of volume that comes up was lower, despite price pushing higher. So that's your divergence. So you draw your line and you say, oh, okay, there's your first wave 1, wave 2, and then your wave 3 here because it tried to go up again. But of course, is that in line with that? If it made a new high here, so 1, 2, 3, and then this has got 1, 2, 3, and that 3-wave, that's quite strong. So this could topple over at any moment, because also you see on a 4 hour, which is a decent time frame enough, you know, showing you a decent range, we've actually broken below that 0 line, which you can see here. So what you do is you apply what we call the 3 option rule, because you're thinking, okay, this has got scope to go down and it wants to sell off, but of course you don't just want to jump in and then see it go and retrace 100 pips against you, get stopped out for it to then fall over. You'd get a bit annoyed about that, wouldn't you? So you've got 193.20's potential further scope, further downside, which is a huge drop, a huge bit of price action. So will it get down there? Well, it needs to break 195, got some previous support. We are currently retracing. So first option is that it's going to retrace to one of these levels into this fib area, but not take out the high. The second option is that it does a full 100% retracement. Third option is that it goes up to 127, therefore making a new high and reaffirming the bullish uptrend. Right now we've had a strong push down. It's been viewed as a correction, but once it goes up here and fails at one of these levels, so ultimately 38.2 to 50% is where you want to see it fail, really, for momentum to carry on going down. Then momentum strategy takes over, and what you do is you would do something like this. Assume that the high's in, take that, take your new high, because we're always looking at the ranges. Every time it creates a new range, you want to focus on the new range with the fib extensions in mind, and also the pullback to the 76.4 as a decent comfortable T1. So 196.15, 16 area as a potential drop back down if it fails. Obviously, if it takes this high out at 197, then you want to look at the 618 and the 764, you know, and just see how it reacts there. But patience is often the only main ingredient that you need when you're trading. You can set these things up and wait for them to play out if you have the patience. Sometimes you might have to wait 2-3 days or even 2-3 weeks when you're looking at gold, for example. So just see how it plays out and let it curl over, and if it does, then you look for a 764 and then a 127 extension, especially with this crossing over. So any questions before we finish? We can always go over anything. I've recorded this session, so you can always scroll through to the relevant currency pairs and go over the information again, and then you can always ask me. And I hope you found it useful. if not, enjoy the rest of your day. I am going to go and sit in the sun because, well, summer's here, it feels like, at least for one day, so we might as well make the most of it. Have a great day, great afternoon, great evening, wherever you are, and yeah, thanks for your time, and yeah, take care, all the best. Thanks everyone, bye for now. Oh, do I have a question? No? Good, done. Oh yeah, I've got a couple of live. I've got a couple of one-to-one sessions. I forgot to say, got a couple of one-to-one sessions